Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to the show. Today I am in conversation with the chairman of Piramal Enterprises and the chairman of Shriram Capital, Mr. Ajay Piramal. Mr. Piramal, so good to have you on CNBC TV18. First, let's take it to the big picture. You're an industry leader. We are at a time when there is heightened global tension when it comes to a trade war. We have seen rupee weakening for various reasons, and also as India, we are entering into an election year. As a corporate leader, how do you see corporate India poised for this?
When you look at the whole scenario now globally, there are trade wars, yes. But I think to some extent, India is not going to be as affected as the rest of the world. Our economy, our domestic economy is pretty robust. Almost 55% of our GDP is only domestic. And that is an advantage that we have. In this whole tension with the trade wars, the rupee has weakened, but it's not the rupee weak as much as the dollar has strengthened. And I think overall we should come out better in this, because with respect to all other emerging markets, I look at the Indian economy is stronger. And there is still a lot of interest in Indian economy. In fact, I see that after this crisis in July, if you look at the foreign portfolio investment is showing a positive after several months of showing a decline.
Over the last few years, your financial services business has aggressively expanded, a lot of it coming in from real estate portfolio and funding in that particular area. Now, I have seen Piramal Group as one of the most agile groups when it comes to change in strategy with changing times. What is the next phase of restructuring and strategy for you?
What I see in the future is that we will see that the proportion of our other than real estate loans going up significantly. Yeah. We will see that housing finance and hence our entry into retail will go up. And in addition, I think we are also going to get some platforms for consolidation of certain assets. In financial services, we also have a stressed asset fund, which is a joint venture with Bain, and I see many opportunities.
So you talked about the focus in the retail space when it comes to home finance. Of course, a large part of your portfolio was in the real estate funding, over 80%. Now it's come below 75%. Now this migration to more retail focus than wholesale, you know, that hasn't gone down well when it comes to the profitability angle. So is it a temporary phenomena? How do you see the profitability bit panning out?
Because of getting a retail housing, for instance, we've seen that we've had a credit upgrade. Right. So our rating upgrade has gone up, and therefore, yes, the net interest margin in any housing portfolio would be lower, but the costs have also come down to some extent. Secondly, I think again, because of housing, we can get a higher debt equity ratio. So our returns on equity, which is what is really key for us, will again come back to the levels that we are aiming for, which is 20%.
For the last 3 years, major aggression has come in there. Now you have a sizable loan book, 47,000 crore rupees is where you ended last quarter. Now what next? Now you have a size. Does it mean that the strategy is now to take it a level higher and maybe inorganic? What is the next strategy?
So as far as financial services is concerned, yes, we are looking at growing the book. But my own belief in this has always been that it's better to do organic growth, because in the lending business especially, it's really the culture and the values of the team that's the most important. And I found that very often when you do just an acquisition on inorganic growth, the cultures are so different, the values are different, that you don't succeed. This is a people's business, and I feel that the basic strength comes from your own people as you grow them. So my focus will be on organic growth rather than inorganic.
What I was also hinting at, Mr. Piramal, is you have a large chunk of investment in Shriram Capital. How do you see that panning out? There have been talks of merging all the listed entities into one listed entity as well. In that, you will be one of the largest shareholders only after the trust. So what is your strategy on that front?
The Shriram Group strategy is actually independent of what happens in Piramal Enterprises. And I think in Shriram there are several options that are being examined, and today we have not yet come up to a final conclusion. The boards and the management team are discussing what various options are, which would create long-term value for the group in the long term.
What I wanted to ask, you said that they both have independent growth paths, but there was also talk at one point in the last few years that is to grow your financial services business under Piramal Enterprises umbrella to a sizable level and then merge it with Shriram Capital. Is that at all on the table now that you have attained size and it's not going to be as dilutive for Piramal Enterprises?
My belief again is that in financial services, it is people that matter. If you were to go in for any large-scale merger, which would mean that at least 1 or 2 probably years would be spent in just trying to organize people to see that they are, aligned, they have the same vision, they have the same set of values, and which would mean that at that time growth will take a back seat. So my view is that in the next few years, you should just focus independently. Both the groups, the Piramal as well as Shriram, are doing well. There are enough opportunities to growth. Let's grow it to a sizable number, and then we should see.
So are you saying that integration issues can be a hurdle to any sort of merger?
In our group, we have done several mergers and acquisitions over several years. And I found that whenever there are just people involved, it becomes much more difficult than when it is of products or it's of plants, and all those are relatively easier to do. And if growth is coming on its own, today both the platforms, as I said, whether it's Piramal, whether it's Shriram, have a good runway ahead. Why bring in any other obstacle today?
All right. In the short term, how do we see the entire structure of Piramal Enterprises? There has been a thought process, you have been vocal about it, that financial services will be a separately listed company. Now it has been subsidiarized. When will the time be ripe for doing that?
So as we have said, we will do it at the right time in the midterm, and that's all that I could say today, that it will be in the midterm where we would have financial services separately, we would have the pharma separately, and we would like to list also our healthcare insights as an independent company in the US.
Now, if I look at your various businesses, financial services, pharma, as well as the data and analytics business, where is the maximum growth likely to come in the next phase? So far, we have seen real estate funding giving you that growth. What is next?
So as I said, it's the overall financial services where we will see the maximum growth rate in the future ahead, in the future as well.
And what about pharma? That was your mainstay business. Now you've come off that non-compete clause with Abbott as well. Now, what is the next phase? Are you also looking at inorganic growth to grow this particular business?
Our non-compete with Abbott actually expires now in September of this year. And we are exploring, first of all, understanding the environment in India as to what it is today. We exited the domestic business 8 years ago. Since then, the environment has changed significantly in India. So we want to be sure of what the environment is for and the future likely scenario for pharmaceutical products is. And if we find that there are businesses that we can acquire which will have a long-term value creation potential and which we can get at a reasonable valuation, we will definitely do that. So we are examining it, but we have not come to any definite conclusion.
So you're talking about the domestic business, and
yes.
which particular area that you are likely to look at?
That doesn't, I mean, that's not so important. It would be domestic business, because when we were there as Piramal Healthcare, we were across several different areas, so it doesn't matter whether it's in one or the other. It is that we should see that there's a long-term potential in it.
And how much of your kitty would you set aside for any such inorganic growth in pharma?
So I don't think funding is a constraint, so it depends on the opportunity. If we think it's worthwhile, then we will adequately fund it.
Mr. Piramal, you know it better than me that Indian pharma companies have been saddled by not just pricing pressure but also US FDA concerns. Some of them have succession issues as well, and management bandwidth is also lacking in some of them. Do you think that some of those big pharma companies or sizable pharma companies also, they will be also on your radar?
We are not interested in looking at businesses which have export potential, because we believe that that story has changed and is changing rapidly. The gains and the advantages that Indian pharma in the export had for generic exports is no longer there. That's why if you look at our own strategy of pharma has always been to get niche, complex products for export. But for the simple, generic, oral solid dosage products, I think that market is highly competitive and not so profitable. So that's not something we are looking at. We would look at the domestic, and if there are even larger companies that want to exit out, I mean, we are open to that.
Okay. And what about the valuations currently? Even though the markets fell and the overall performance of the companies came down, a lot of investors say that in terms of valuations, the market capitalization of most of the pharma companies which are struggling is still on the higher level. What do you have to say about that?
Yeah, so rather than be, this is a very general statement, but yes, there are some valuations which are high. That's the challenge when we have to, when we are looking at acquiring. Unless and until we find that there is a reasonable valuation or a valuation that we think in the long term we can create significant value, only then would we invest in.
Right. OTC, that's also one space that you have. You have looked at several assets, several OTC brands, but you have always found the valuations unattractive. How are they poised right?
So we have actually done acquisitions in OTC. We have not done the really mega acquisitions, but we have been growing OTC. What we're doing in OTC is actually what we did in the domestic market earlier. We are building on our sales, we are building on our distribution, so that we have the pipe ready for introducing new products, and we could introduce products either through our own development, which we are doing, or through acquisition of smaller products. So we have done that in the last few years. You've seen we've acquired several products, whether it's from the OTC brands of Pfizer, of Merck. So this is what we will continue to do.
All right. So amidst OTC formulations as well as critical care, which one in the short term seems to be showing more growth for you?
So the critical care is a much bigger portfolio, yes. And you know, about 2 years ago we invested almost $300 million in acquiring of portfolios from Janssen and Mallinckrodt. So obviously that is bigger and has a little more in terms of amount of dollars that will show higher growth.
Right.
But in terms of, if you look at percentage of growth, will be the OTC.
When we shift focus to your other businesses, you did mention about the stressed asset space. You were sounding very excited earlier when the whole IBC process started. With Bain, you have a $1 billion fund, but nothing meaningful has come out of it. Why?
So I think we are still very excited about it. We have got several deals which are in the cooking. One of ours, very well known, has been in, there is a matter of dispute. We had funded Dalmia in the acquisition of Binani Cement. There is a dispute. Dalmia and us were declared as H1 in the process. It was challenged by Ultratech. That matters before the NCLAT. And we'll await what the decision is, and then we'll see. But besides that, I think you will see in the next month or two, we'll be announcing a few other deals. The process is gaining a lot of momentum. I think the whole IBC process, and so with us. Also in the fundraising, I think we have some of the marquee names already coming to us. So I think you'll see some action there. Our team is there, and it's all
through the NCLT processes only you will be looking at stuff, or is it outside of IBC as well?
One of the things that's happened because of all the changes in the law and what government has done, and the Reserve Bank, is that there are many people who would otherwise have never wanted to settle are coming and talking to us, and just before the NCLT process starts. So we will see a combination of both. So we are going to probably announce in the very near future both deals within the NCLT process and outside.
Which are the sectors in this area which are attractive for you?
We're looking at several sectors, but some of the sectors that we've looked at, of course, cement with this whole thing in Dalmia. We're looking at steel, we're looking at power, we're looking at chemicals, pharmaceuticals, auto ancillaries. These are some of those that we are.
All right, and when we talk about the new platform on renewable side that you are now looking to create, tell us more about this. And you have made some investments in the renewable space in Acme Solar as well as in Renew. So all that is going to come under this platform?
So no, what we are saying is that people, just like Renew and all that, these are large companies which have a large asset base. Right. But there are many companies which have had a smaller asset base as well. As I look at it, the whole scenario is changing, and there is going to be, as you grow bigger in size, you're going to get advantages. So we may be acting as accumulating different assets, and we'll have a fund. We are not going to be investing in it as a sole. We're thinking of actually launching a fund which would be there for the renewable sector. It's still some work in progress. We are still studying what the options are, what is the evaluations and possible, and probably will list a fund.
Which are the other new areas or sectors that are attracting your attention, Mr. Piramal?
Piramal Realty is actually growing significantly there with new parcels coming in and lots of options available.
Right.
In this space, again, we feel that just as we talked about consolidation in renewables, I can see a consolidation taking place for commercial spaces. Our belief is that a commercial office space is going to grow up the demand as the economy grows well. And there is, again, smaller developers, or not the large ones. They do have spaces, but large companies, and especially global corporations, are not willing to, rent them out because they don't have that brand name. But if we can do again, collection of all these and brand it in Piramal's name, and maintain it well and continue to improve on the facilities, I think that's, say, another opportunity.
Mr. Piramal, you have also invested in the past to make hefty returns. You did that in Vodafone. Are there other such avenues that you are eyeing right now? Which are the areas that look good?
So in this, we are opportunistic, and wherever there are opportunities, if we can identify what the risks are, what the returns are, we are always ready to do that. And we continuously evaluate opportunities. It's not necessarily in a particular sector. It could be across sectors, and that's how we look at it.
Because you're known to be the biggest deal maker on the street. So what are we gearing up for, and which sector is what I want to
So I just think that the Indian economy, I see the future as actually good. And I'm very optimistic of what's happening in the economy, in the country. I think I would say that in the future, let's say about 5-7 years ago, we invested a lot outside of the country. Today, I would say that India is, to me, the most attractive place to invest in.
When we talk about the entire Piramal Group, it's in a way a conglomerate with so many sectors under one umbrella. How do you see the succession plan for the group?
So the succession plan, I think, first of all, if you see in the group, it's a conglomerate. We have businesses both in India and outside of India. And we have a very high quality mix of talent, which is both from India, outside of India. Many of them have worked with us for many, many years. These are, we believe, the best in class. I still believe that with the family owning such a substantial amount, and that's where you call skin in the game, and if you call of ESOPs, we have the largest ESOPs amongst the family. I think I'm fortunate that both my son, my daughter are both interested in business. I think I just realized a very interesting thing, that we have 6 people in the business, if you count my wife, my son, my daughter, her husband, and my wife's fiance. All of them are MBAs either from Harvard or Stanford. So that's a good record. So hopefully some of these people will take up the future.
Talking about Piramal Foundation, of course, corporate social responsibility is so important, and Piramal Group is doing a lot on the trust front. So tell us something about that, and what is the ethos and the mandate with which it operates?
We have a great team of people, very dedicated. Actually, we employ 5,000 people in our foundation. And we are working in the areas of education, where we are touching now 500,000 kids on a daily basis.
Right.
We are doing in healthcare, again, our beneficiaries, we have touched something like 9 crore beneficiaries, and in clean drinking water as well. We believe that the private sector or individuals can create new innovative solutions, and we believe in scale, and we believe in partnership with government. So today we are working with 14 state governments, we are working with the central government in these areas.
All right, good luck with that, and thank you so much, Mr. Piramal, for taking all my questions. Thank you so much for joining us on CNBC TV18.
Thank you, Nisha.
Thank you.